Gold prices has crossed past 1,25,000 rupees per 10 gram and everyone is confused what to do now. Before we dive deeper, here is a quick summary of the video. Can I or anyone predict the gold prices? The short answer is no. Gold prices are influenced by many unpredictable factors such as geopolitics, massive money printing worldwide, global trade wars, and ongoing wars between the countries. So it is really not possible to predict gold prices. Am I buying gold? The short answer is yes, but only for personal consumption. I'll explain why. Should you buy gold as an investment or trade it now? The short answer is no. Gold has already had a significant rally in the past couple of months, and unless it corrects by 10 to 15%, I won't chase it right now. Now let's discuss why are gold prices skyrocketing. Couple of reasons actually, I'll list out primary reasons. First reason, central bank buying. Central banks, especially outside US, are aggressively buying gold to diversify their reserves because trust in US dollar and US treasury is fading due to their ongoing war between almost all the countries and their alarming high debt. Second reason is US tariff and trade wars. This tariff and trade war has led to uncertainty in the market, and gold is the best performing asset class when the market is uncertain. So this is also leading to strong demand for the gold. Russia-Ukraine war, the war escalates geopolitical risk, and at the time of geopolitical risk, the safe haven assets are preferred, which is gold. Historically, gold has performed well during the time of geopolitical instability. Each of these factors has contributed to increase in demand of gold, while the supply has remained inelastic and hence the prices are increasing. Now let's cover gold price phases in the last 20 years. First phase started in 2008 when there was a global housing financial crisis. Due to instability in the financial market, gold prices has rallied. And US has also started aggressively printing money, which has in turn increased inflation in the economy and has led to higher gold prices. Phase number 2, which started in 2012 and lasted till 2015. Gold prices has corrected significantly during this phase. Gold prices has corrected by at least 30 to 35% in 2012 to 2015 phase. So yeah, gold prices does decrease and it does get corrected. Third phase started somewhere around 2016 and lasted till 2019-20 when the gold prices has remained stable or relatively on a upward trend. Then the fourth phase, which started in late 2020 and lasted till end of 2023. During these phase, gold has given almost no returns. Then the current phase, which started in 2024 and is continuing till now. During the current phase, gold has already given more than 100% return. Now, if you look at the historical data, whenever there is a phase like current phase where the gold has already given a huge run up, in the next couple of years, let's say next 5 years, either gold prices has remained stable or it has corrected by 30-35%. Indians primarily buy gold for three reasons. First, daily consumption. Second, weddings or events, etc. Third, for investment or trading purposes. By daily consumption, I mean buying gold for everyday wear or consumption. Since you are unlikely to sell this type of jewelry or accessories in the next 10, 15 or maybe 20 years, it is practical to buy when needed rather than timing the market. Because as I said, timing gold prices or estimating gold prices is not feasible. Second is wedding. Let's say your wedding is due in next year and let's say you want to accumulate 240 grams of gold. What I personally will do is I'll start buying gold with SIP so that my prices are averaged out. So let's say if my wedding is due in next year and if I have 12 months to buy 240 grams of gold, I would start buying 20 grams of gold every month so that I accumulate 240 grams by the time when my wedding is due. This approach will average out your price volatility, and what you can do if prices correct by 5 to 10% in any month, you might want to double your SIP during that month. So instead of buying 20 gram per month, you might want to buy 40 grams in that particular month. Now investment. Right now, investing in gold at this peak carries a significant risk. As I explained earlier, gold prices has corrected historically after giving such a huge rally. See, there are three likely scenarios from here. Scenario 1 where price correct by 20-25% in next 2-3 years. In that case, you will lose money when you invest. Scenario 2 is that gold prices will remain stable in the next 5 years or maybe next 3-4 years and it will start increasing again. And even in scenario 2, you will end up either losing money or not earning anything. or maybe returns which are even less than the inflation. Scenario 3, where the price further increases by 10-15%. See, Rakesh Junjunwala used to say that you don't have to participate in every party. Chasing the peak often lead to losses. So I personally would not want to chase the gold right now unless for personal consumption. So buy gold for consumption or weddings, but for investment purposes, have some patience. It is better to have some patience rather than losing the money. Thanks for watching this video, and I'll see you in the next one.